Kaspa is the next Bitcoin contender in the proof of work space, folks. If you remember Cadena, if you remember BitTensorTau, there are a couple of good projects out there, at least on paper, who have tried to be the next Bitcoin, or at least provide us something of value or provide us something new. Kaspa is one of those projects, folks, that is as the community is saying and as the proponents believe, is one of the best Bitcoin contenders out there in the proof of work space. We've seen proof of stake, we've seen different consensus mechanisms in Stellar and XRP and other utility-based projects, what ISO 20022 is doing. But when it comes to proof of work, this is the next shiny toy, folks. Everyone has been talking about it. We've been talking about it since a while now. It did its move, and now when it has come down, now is the point, the make or break point of where these projects go. Will it indeed go to multi-trillion levels like Suki over here saying, which currently Kaspa is only $1.5 billion, or will it fade like Cadena suddenly faded? Let's hope that it makes a comeback as well, but oftentimes projects come and go. Let's hope that Kaspa does more, obviously, the proponents, for the sake of proponents at least. So this is a really good sheet to let us know what Kaspa is in a nutshell, at a glance. Kaspa at a glance, basically. Fair launch, November 7th, 2021. We have covered it before as well. Consensus proof of work, GHOSTDAG. But basically, it does not. It also it is a hybrid sort of consensus mechanism, proof of work along with GHOSTDAG, community governance, ticker is CAS, block time 0.1 second, max supply 28.7 billion, hashing algorithm K-heavy hash. So look at this. Kaspa, the world's fastest open source, decentralized, and fully scalable layer 1, a DAG-based multi-ledger proof-of-work consensus powered by the Ghost DAG protocol, accommodating the largest possible volumes and fastest possible confirmations. Kaspa is the only decentralized network spacious and performant enough to sequence the world. So a lot of people in the community they said that Kaspa has everything. It only lacks that sense of providing real world use cases in the globe. And now we've seen some I've seen some posts and research based articles and community posts basically who are saying that Kaspa will go towards that utility, and it will try to become a utility based token, provide value to the globe, fastest transactions, it is scalable, it is secure. Block DAG, this is Kaspa's block DAG structure, which solves the orphan block problem, allowing frequent parallel block generation and flexible scalability with its unique consensus method. GhostDAG. GhostDAG is a consensus protocol that keeps transactions fast, secure, and in a fixed order, even when many blocks are produced in parallel. Then we've got Rust. Kaspa was rewritten from Go to Rust. Rust language emphasizes performance, type safety, and concurrency, enabling Kaspa's overall speed to 10 bps. Awesome. Generalized Nakamoto consensus. Kaspa's consensus engine GhostDAG is grounded in the mathematically proven security of Nakamoto's protocol. This is why we are comparing with Bitcoin and calling it sort of that Bitcoin contender, because it has some spirit of the vision of Satoshi Nakamoto in terms of what BTC is all about, proof of work, efficient proof of work, basically. Kaspa's choice of the K-heavy hash algorithm balances environmental concerns with mining efficiency, avoiding the energy waste of traditional POW systems. Instant confirmation by creating blocks at a much higher rate than the network delay. Confirmations accumulate as fast as the internet could support. Awesome. So what is coming next? Now this is what we're interested in, because we've covered this, we know this. Upcoming, this is what everyone is waiting for: smart contracts. Layer 2 solutions based on ZK rollups are being developed. the most advanced smart contract systems known to date. And then we've got the DAG-Knight protocol. DAG-Knight will allow nodes to flexibly interpret the DAG structure, adjusting to varying latency and internet chaos. Trilemma solve. Everyone knows that this is a trilemma of blockchain. If you can achieve two basically on paper, and there are projects that claim to have solved that: scalability, security, and decentralization. So trying to solve that, if you're a finance student, you might know the unholy trinity, the unholy trilemma, folks. So this is a similar concept to that. That if you achieve scalability and security, decentralization is compromised. If you achieve decentralization and security, scalability is compromised. If you achieve scalability and decentralization, security is compromised. So Kaspa claims to solve this, or at least solve it in the future. White coin spread, top 100 addresses excluding exchanges. Okay, so this is awesome, folks. Look at this. Kaspa proof of work time. Then we've got Bitcoin 0.04 blocks. We've got Solana POS time, similar time 37, and similar time. Kaspa is way ahead. Then we've got XRP. By the way, XRP and the projects, they are not totally relying on this. They're relying on their partnerships, creating an infrastructure, forging partnerships, and providing efficient use cases, or the ones that enterprises require, period. And then we've got LTC 0.18 block, SUI 33, 34. Meanwhile, it has reached 180 something. Okay, so this is what we're talking about, being a proof of work. My CAS best case scenario, the prediction: if Kaspa reverts to the upper bound of the power law. If you all do not know, power law is a hypothetical law in which we've seen in Bitcoin as well, that ultimately the price goes up, and this is the power law. Over here, this is the trend line. It has touched this. From this point onward, the power law says that Kaspa's price is going to be reaching $1.60 soon. I saw a video I'm going to be sharing with you, and then I'm going to be giving you Crypto Proselytes daily recap. This is interesting as well. First, let me share with you. Yeah, this is it. This is the video that I wanted to share with you guys from Ashish Rathordind. Okay, so let's check this out. Shout out. What is this? Let's see, Kaspa's mass protocol. This one seemed really interested. I wanted to share with you guys.
So you've heard about Kaspa's insane speed, right? But have you ever stopped to wonder how a blockchain
This is latest, by the way.
can be that fast without, just completely falling apart? Well, today we're pulling back the curtain on Kaspa's mass protocol. It's the secret sauce, the clever engineering that makes it all possible, and we're going to break down exactly how it works. All right, here's our roadmap. First, we'll tackle the big problem, the hidden dangers of all that speed. Then, we'll dive into Kaspa's elegant solution for measuring a transaction's true weight. We'll break that down into its three key parts, see how it works in the real world, and finally, we'll talk about why this whole system is such a big deal for the future. Okay, so before we get into the solution, we really need to understand the problem, because when you have a network this fast, it creates some pretty unique challenges that you just don't see anywhere else. And it all boils down to this one question. When a network is processing a massive number of transactions every single second, what's the catch? What's the hidden cost that comes with that incredible performance? Well, here's the deal. Without a really smart system in place, that speed becomes a liability. You get a huge computational burden on the nodes trying to keep up. You get immense storage pressure because the blockchain database starts to bloat like crazy. And all of that makes the network a prime target for spam attacks that could just grind the whole thing to a halt. So how in the world does Kaspa handle this? Well, instead of using the old method of just looking at a transaction's file size, they built a much smarter ruler. One that can measure the transaction's true weight, its total impact on the network. And that smarter ruler is called mass. It's not just about size. It's this brilliant all-in-one number that captures the entire cost of a transaction, from the processing power it eats up to the digital real estate it occupies, both right now and forever. Think about it like you're running a shipping company, okay? The old, simple way is just to charge people based on how big their box is. Pretty straightforward, right? But Kaspa's method is way smarter. It looks at the box's size, sure, but it also considers how heavy the contents are, and, this is the key, whether you have to store that box in your warehouse for the rest of time. It's just a much more honest way to figure out the true cost. So, what actually makes up this true cost? Let's peel back the layers here, because MAS isn't just one thing. It's actually a combination of 3 different components, and each one measures a totally different strain on the network's resources. First up, we've got compute mass. You can think of this as the heavy lifting cost. It measures how much brain power or CPU time the network has to burn to make sure your transaction is legitimate. So a really complex transaction with lots of signature checks is going to have a way higher compute mass than a simple one. Next, there's transient mass. Now this one is super straightforward. It's basically just the size of the transaction in bytes. The bigger the transaction, the more space it takes up while it's zipping through the network, and so the higher its transient mass. Simple as that. And finally, we have what I think is the most genius part, storage mass. This measures the permanent footprint a transaction leaves on the network's main database, the UTXO set. So if a transaction creates a ton of tiny leftover outputs that clutter up this database forever, it gets hit with a high storage mass. This is all about protecting the long-term health of the entire network. It's incredibly forward-thinking. So let's just recap that because it's so important. You've got compute mass, which asks how difficult is this to handle. You've got transient mass, which asks how big is the box. And then you have the crucial storage mass, asking, does this thing need to be stored forever? All 3 together give you that perfect, complete picture of the real cost. Okay, so that's the theory, which is really elegant. But how does this actually work in practice? Let's take a look at how mask gets turned into real transaction fees that keep the network safe and sound. First off, every single block has a strict limit, but it's not a limit on the number of transactions. It's a limit on their total mass. Each block has a budget of 500,000 mass units. What that means is a block could have, say, 1,000 tiny, simple transactions, or just a handful of really heavy, complex ones. It's a flexible system that makes sure no single block can ever clog up the network. So how does this turn into a fee you actually pay? Well, the formula is surprisingly simple. Your minimum fee is just your transaction's total mass, multiplied by whatever the network's current fee rate is. It's a direct, one-to-one link between the resources you use and the price you pay. No guesswork. Now this is where it gets really, really cool. With the way the network is set up right now, that formula simplifies down to something beautiful. 1 unit of mass costs exactly 1 sampai, which is the smallest possible unit of Kaspa. It makes the whole fee system incredibly predictable, transparent, and just fair. Let's look at a real-world scenario. Imagine you're doing a transaction for a complex smart contract. It might have a really high compute mass because of all the verification it needs, but a pretty low storage mass. The system sees that this transaction requires a lot more processing power from the network, and so the fee is higher to match that effort. It just makes sense. Okay, now let's flip that. What about an airdrop to 100 different people? The compute part is easy. It's a simple operation. But the storage mass, it's through the roof. You're creating 100 new outputs that add permanent weight to the network's ledger. The mass protocol spots this long-term burden immediately and charges a much higher fee because it's protecting the network from getting bloated. So, we get to the big question. Why does any of this matter? Why go to all this trouble to build such a sophisticated system? What's the ultimate payoff here? Well, this is it. This is the payoff. You get a true, multi-dimensional way to measure cost. You get real economic fairness, where you only pay for the resources you actually use. You get incredibly robust protection against spam. And maybe most importantly, you get long-term sustainability. This is the very foundation that allows Kaspa to be both ridiculously fast and stable for years to come. And that leaves us with a final, really big thought. This whole approach of pricing not just the immediate cost, but the long-term burden of every single transaction, could this be the blueprint for how all high-speed blockchains need to work in the future? It's a pretty powerful idea to think about. Thanks.
Some technical elements of Kaspa. Along with the technicals, let me share with you a post over here. Yeah, this was it, which might interest the utility proponents like XDC fans, XRP fans, QNT, Flare Network fans as well. it might intrigue them because the CAS community believe, according to Quick Crypto, that Caspa's biggest shortcoming is its lack of adoption. Institutions have done their research and are now realizing that Caspa is the only infrastructure capable of scaling and monetizing real world data streams. AWS can't, Google Cloud can't, Chainlink and Starlink can't. Research takes time, but boy, it is worth it. The adoption equally takes time, but now it is accelerating. CAS could become a $3 trillion asset, a utility asset, mind you. So every utility project has its unique use cases, like XDCs working with global trade finance. Caspa might be monetizing real world data streams, folks. Let me bookmark this for future reference as well, because this really is interesting. Because Caspa might interest you guys as well, because this might be a project that you might want me to cover often as well. A really interesting narrative, and a lot of things happening for it. This crypto proselyte, which I told you I'll share the recap with you. This is Caspa Daily Recap. Market sentiment still heavily bullish. CAS is currently ranked number one in market-wide bullish sentiment. Major ecosystem research coverage. BSC News published a full analysis on Caspa's Layer 1 design and tokenomics. Space-based decentralization initiative. Caspa's CONI, Caspa Orbital Node initiative, gained renewed attention, with community members highlighting that a Caspa node is being deployed. DAG, Night, and 100 BPS discussions grow. Technical threats continue breaking down. How 100 BPS pushes Caspa toward Visa level throughput, how DAG Night removes fixed latency, how MEV auctions and Oracle protocols plug into the long term design, Caspa's Reddit adds Cas tipping integration via Caspa Tip bot. Reddit community now has native Caspa tipping, expanding real world microtransaction use cases. So the real world use cases are being talked about. Caspa isn't slowing down. It has a mission and it will reach its destination, folks. So hopefully, and the Flare network fans, the XDC network, QNT network fans, what do you guys think about Caspa? Do you think that it has the potential to be the next Bitcoin contender in the proof of work space? And do you think that it also, along with the other utility projects, has the potential for real world use cases? I would really like your opinions. Do hit the comment box below and let the community know. Anyways, guys, this was it for the video. If you liked it, make sure to like, share, comment, subscribe, and hit the notification icon if you're interested in utility coins and potential gems. And you can also support the channel by checking out Patreon by following the link in the description box below. Until next time, stay blessed and stay tuned. Thank you very much, everyone.